Everyone, a very good morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of Visual JForex, we will continue our work using the indicator Doji Candlestick. This is a pattern detector which we can utilize to see if the momentum is bearish or bullish, and accordingly, we can look for the optimum entry points. This is going to be the third and the final part of this series involving this indicator. So let us now head to the Visual JForex board, which has been developed by the Dukascopy Bank SA. Here in last two sessions, the developments so far include this instrument subscription where the Euro USD is being used as the instrument of choice. Afterwards, the position amount has been defined at zero to make sure there is no existing open or pending position in the account to make sure that there is no doubling down on any existing position. Later on, this Doji candlestick indicator block has been added, which will give us the idea whether the last hourly candle was a doji candle or not. And to look at the price volatility, we are also taking help of these two gate historical candles with the time frame of hourly, the varying time shift values of 1 and 2. And these two 10-second blocks will be utilized to exactly pinpoint the entry point. And later on, these variables were created to look at the actual difference between the opening, closing, high, and the low values of the last hourly candle, which are going to be essential while determining whether to go for the trade or not. And on the lower side, we have these formation in place to look for the buy trades. Now we have to create a mirror image of this. This session is now dedicated to formation of the sell trade. We will look to initiate the short sell when we have the momentum on the bearish side. So I will explain to you the underlying logic, and afterwards we will look to execute it on the Visual JForex platform. This is the Euro USD chart of the hourly time frame, and here I have plotted these early chart and added this formation of the doji candlestick. I will zoom in so it is easier to recognize. This is the doji candle, this is also one. So we have these formations where the closing and opening price tends to be almost close to each other, and we have this long tail. Sometimes there is long wick, or sometimes this opening and closing value tends to be clustered close to the mid level. So this time we will look to initiate the short sell when we have the opening and closing price concentrated or near to the low price point, and there should be long weak and a short tail. So that will be the moment when we will look to initiate the trade, provided the existing momentum has been bearish. So for that, we will also consider the prior hourly candlestick, which should show the momentum to be bearish. We will consider its closing value and opening value, and we will compare it. We will need its closing value to be lower than the opening price. So let me find out that kind of example. So here we have this long week is there. We have this difference between the candle open and candle high, which is lot more compared to the difference between the candle close and candle low, and also the prior hourly candle is showing decline. So this is going to be the continuation of the momentum and appropriate for initiation of the new trade. So these are the kind of formation we are looking to go for the short sale trade. Okay, so this is the underlying logic, quite easy to understand and equally easy to execute. So now we head to the Visual JForex board. Okay, we just have to get the mirror image of this. So the formation is going to be of open market, market open price, whatever is the existing price prevalent at that point in time. We will look to initiate the trade then and there, provided all the other conditions are being met. Okay, so we are going to need 6 of the if blocks to define the conditions. So I will add 6 of these. And afterwards open at market. Okay, so we have this. So Doji candle output goes as the first input, which should be greater than 0. So that will ensure that the last hourly candle was a doji candle. That's what we need. So first input needs to be greater than second input. Then we have to consider the closing value and the opening values and compare it to each other. We need the last hourly candles, which is the candle 14 closing value, to be less than the opening price. So I am going to take auto created variable candle 14 and its close needs to be lower than the open. So first input less than second input. Then we consider candle 15, which is the second last hourly candle, which has a look back period of 2. There also we need the closing price to be less than the opening price. So I will take candle 15 candle close and candle 15 candle open. And then it will be like first input less than second input. So we have defined these conditions using the price action data. Now we have to compare the difference between the tail and the wick. We need the week to be a lot longer compared to the tail. So for that, I will have to create new variable here, considering the actual difference between last hourly candles, candle close and candle low. This is the actual difference. I will need to multiply it with 4 times, and then we will compare that value with the difference of candle high and candle close, candle open, not close. So I need to bring in the calculation expression, which I will add just below this. We need to disconnect prior iteration flow. So I will take candle 15 candle close and candle 15 candle low. This is actual difference SLD. And multiply it with DM. DM has the defined value of 4. Here you can see. So this is going to be A1 into A2 I'll name it as CV, and this variable will be compared now with the last hourly candles, candle high and candle open difference, which is SHD, and it needs to be lower than SHD. So the SCV needs to be less than the SHD. That means first input less than second input. Afterwards, all we have to do is look to initiate the trade as and when we see the price dipping below the last hour's closing value. So for that, we have to compare the candle 15 candle close value with the closing values of these two, candle 16 and candle 17, which are 10-second candles. So I will take candle 14 candle close as the common input here. Candle 14, candle close will be the common input in both of these cases, which will be compared to the closing values of candle 16 and candle 17 respectively. We need the candle 16 candle close to be less, so first input less than second input, and candle 17, which is the penultimate 10-second candle, it should have closed higher. So after that, all we have to do is join it to the open at market. First input greater than second input, and then this is going to be a sale trade. Let me place all of these blocks on the lower side, which should not take much time. Now this is almost complete. All we have to do is define these input parameters. Default instrument remains Euro USD. Trade amount I will change to 0.1 million. Slippage will be changed to 2 pips. And coming to the stop loss and take profit, it will remain same as it was for buy trade order. So this is going to be in the risk reward ratio of 2:3. So here we are, almost done with the sell side of the algorithm, and it is looking like the mirror image of the buy side. So we have a symmetrical formation here, and to make sure that the trade iteration flow is going through till the very end, I will color code it and let me check it once. Yes, we have it done perfectly. So with this, my side of the presentation is complete. All you have to do is practice it on your own, try out the formation and how it works. You can of course let me know. So this is the side of the story which will end here. And for further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there. For carrying out the testing on the historical data, you will need the access of the JForex platform. For all these three, the links have been provided in the bio. Thank you all for joining in. See you next time around. Till then, goodbye.